The US dollar has continued its move to the upside, only modestly in trading here today after yesterday's sharp rise to the upside after the US-EU trade deal announced over the weekend. China and the US still continue their meeting in Stockholm today. In this video, I'll take a look at the three major currency pairs from a technical perspective: the euro versus US dollar, dollar versus yen, and sterling versus US dollar, to kickstart the North American session. Hopefully it'll help you in your trading today. So let's get started. Let's look at the euro versus US dollar from the 4-hour chart. When you take a look, I want to take a look at the 4-hour chart because look at this big move to the downside in trading yesterday. It was a huge move that took the price up below certain swing areas, in particular this one right here, which was defined by different swing highs through here, and then we came down and based against the level here before moving to the upside. We fell through that level like hot knife through butter, I guess, between 1.1614 and 1.16309, and we rotated all the way down to these lows right through here, which was broken in trading here today, and we moved our way all the way to 38.2% retracement of the move up from the May high to the July low. That 38.2 came at 1.15378, down to another swing level that I had earmarked here with one gap right there, and then these different highs through here before the market moved to the upside. So all that the buyers came in against that level, and as you can see, the 38.2% retracement is trying to hold support here. I like this. Look at the 38.2% retracement as a key barometer. If the price is able to get below that level and stay below that level after a trend-like move that we saw in this move to the upside, then the sellers are kind of trying to take more control from the buyers, aren't they? And so that level is going to be the key barometer for traders here today, 1.15378. We're currently trading just above it at 1.154, well, 39386, right at the level right now as we speak. If we're able to get back below that level and get below this 115.25-ish type area on the downside, should open the door for further downside momentum in this pair. So watch those levels closely. If we do break up, move back to the upside, getting and staying above this levels up here between the 55 and 62-ish type level would be more bullish and may signal that the sellers are running out of steam against that key retracement level, so be aware of that level too. Let's take a look at the dollar versus yen next. So again, I'll focus on the 4-hour chart, and as you can see in trading here this week, the price has moved up, not as dramatically as we saw in the euro versus US dollar, but nevertheless to the upside. Today's high prices came right up to the high of this swing area. The swing area, was defined not recently, but going back in time to these levels right through here where we had support, then broke through that support, and then traded above and below the level before basing and moving to the upside here, basing and moving to the upside here, breaking below it here, and not returning to that area until right here. So all this area helped to form this swing area, and that's where the price came up to in trading here today and found willing sellers. 148.56, 148.73 is where that area comes into play if we're able to stay below that level. Currently trading at 148.69, so in between that level right now. If we move below that level, then that would take some of the pressure off of the buyers, give the sellers some hope of a further corrective move to the downside. If we can't, then we look toward the high price that we saw in the month of 2 weeks ago, as a matter of fact, at 149.18, and then start to focus on the 200-day moving average. Do we make a run toward the 200-day moving average? Price hasn't been above that 200-day moving average. You can go all the way back to here, which is in February of this year when the price spiked above it and then rotated back to the downside. Never been above it since that time. So be aware of that. Back here was the closest that it came to it, and then here as well. So those levels on that 200-day moving average just kind of looms ahead if we can keep the bullish bias going in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And when you look at the 4-hour chart of this currency pair, what do you see? Well, I see pretty strong support right in this area. This is kind of a floor area, also represents a 38.2% retracement. That floor area comes between 133.60 and 133.78. As you can see, the price fell below that level in trading, I guess, yesterday, and continued the momentum to the downside in trading here today. Whereas since rotated back to the upside to test the low end of that floor right through here. If it's able to hold resistance against this area all the way up to 133.78, then the sellers remain in control. Be more favored to the downside for the pound versus US dollar, with the not a lot of support until we get down to the 50% retracement level right through here, where we also had other lows come into play here, and here, forming that next key target on the downside for the pound versus US dollar. So stay below this level, look toward this level right through here as the next key target on the downside for the pound versus US dollar. So there you have it, a look at 3 major currency pairs for your trading. Good fortune with your trading. My name is Greg Mikulowski. Bye-bye now.